The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. December 13th. And thank you, Steve Rhodes, for a great 2 hours. Very educational. You know, here at TFNN, we do our absolute best to give you the kind of veracity, the kind of study work that we have done for so long, and to impart some of that knowledge as much as we can to you, the listeners. Sometimes it's very difficult. It's one of the reasons why I love to have these seminars and webinars and Master Trader series, because there is a difference when you can spend a lot of time on one particular aspect, which is kind of not what this format is right here. It allows for it, but it's very difficult to do it when you know that quite a lot of people are not seeing the charts, they are listening. But you can see the charts if you go to Tiger One right now. And these shows my show's archived on Channel 11. And this is a fantastic period to be involved with TFNN. Why? Because there is this Tiger, it's really the Tiger gift. You know, talk about Tiger dollars. It's a Tiger gift. It's a Tiger gift to you, to TFNN, and especially to the Salvation Army. In a period like this, if ever there was one particular cause, when I come out the Star Market, or Shores it's called here. Actually, this is still a Stars, not a Shores. And I see the Salvation Army guys. I cannot help but say I want to give something. I always want to give something, and you know, that's besides other donations that you give during the year and whatever. Because, first of all, standing out here in the Northeast in this freezing cold weather, I'm prepared to pay somebody for doing that. But that's not the point. The point is, it's really an organization that does a terrific amount. I remember, I think it was on 2020 or 60 Minutes on one of those shows, and they were delving into, it was after one of the tragedies. I don't know if it was Haiti or one of those tragedies. And they were going into the different aspects of how much each institution, each administrative part of these institutions, the costs involved, and how much of your donation goes. And I must tell you that Salvation Army came out with really well. There was one phase, I remember distinctly, there was a phase with one particular city where things were not as they should have been, and it was really a personal thing between, I think, the president of that particular Salvation Army center. But otherwise, I've always found that when you look at where your money is going, the fullest amount, Salvation Army. So go to the front page of TFN and check it out. Certain amount, $500, $1,000, 5 to 10%, besides getting a 25% bonus for your purchase of the Tiger dollars. You will also get the opportunity to be able to donate to the Salvation Army through Tiger, through TFNN, and what more could you want? It goes in your name. You'll get a receipt saying thank you, and this is the amount that you can tax deduct. Even without the tax deduction, I think it's just a great bargain. Now, talking about bargains, my CD introducing the ChapmanWave methodology, right there on the front page. I thought, since I had so many requests and so many questions about what constitutes the what do you do really in your webinars? What exactly is going on? And is it possible to get the CD to get a start, and then maybe sometime in the future we will get to your one of your seminars or webinars or Master Trader series? And absolutely. So I decided that I would have a sale on my CD, which is usually $249. I'm going to give a half price sale. Hey, that's not good enough. Between the half price sale, I've thrown in a month free of my my newsletter, the opening call. And let me just check now. I don't want to say anything that's not appropriate. Right at this particular moment, out of our 5 stocks that we have long, 4 of them are up, and 1 is down. Just right this moment, 1 is down just a few cents. So That's the kind of work that I like to do. That's very important. I've warned everyone that right now the charts are going right to my peak D or E in the ChapmanWave. You can see it if you're looking at TFNN. You can see right there. There's that V-shaped formation. I talk about the V and the cup formations in the book. A great deal of information is right there. And if you add it to your own trading techniques, I insist that my methodology doesn't become your methodology. Your methodology is adding just a little bit of information to make your methodology even better. The fact that it's part of a ChapmanWave, hey, and you wouldn't even care about that. Well, you care about it if it works, but you won't care about it in terms of title. It is yours. When I meet you and you turn around and you say to me, I'm using your methodology, I want you to be able to say to me, yeah, and I'm putting it together with so-and-so's technique, my technique. It's just part of the potpourri of all the... I want you to have as many trading tools as possible. I've recently just done because of the repair that I had to do, because of the damage from the storm of Sandy. I had to do quite a bit of repair work. I did a lot of it. Actually, I did quite a bit of the internal work myself. I love it. I enjoy it. It's the only time I can get away from the computer. It forces me to get away from the computer. I painted a whole bunch of rooms. I love that. To me, that's what I do. Well, when I'm painting, I know exactly what I do. Yeah, I've used a sponge brush. I try to use the hairbrush, but I use a sponge brush. I've used it now for, I don't know, since my very first apartment. So I'm going back decades. I've painted everywhere. I've painted things. I love paint. I love that. I also like to draw, but that's different. That's artistic. This is different. And when I'm doing that, I'm looking for the tools. I'm looking for the right. I use my sponge brushes, all the different sizes. When I'm done, I dump it. It's all gone until the next year or a few months or 6 months or whatever it is when I do it again. I have brushes. I've tried brushes. I do a damn good job with those sponges. And so I know my techniques, and I get very upset if I run out of masking tape, or if I don't have not a bounty, but a tissue. A tissue is for wiping away things very neatly. It's better than the harder paper towels. You got to know those techniques. Well, it's exactly the same when you're looking at prices and price movement. Why? Look at this chart here. So go to the front page. You'll be able to get. I actually give you $4. That's really what it is. You're getting my CD at a discount. 27 chapters. You don't have to go, just read it like a book, and whatever sinks in, that becomes yours. And then you can go back and review the stuff that was a little more difficult. You'll be amazed at how much just pops out. You say, oh my goodness, look at, you'll never, I told my webinar people from last week, I said, you will never look at a chart again the same way. Whoever puts up a chart, you're immediately going to go, peak A, peak B, peak C. Why am I expecting a bit of a pullback here? Why did I consider that I might want to go short? And then I thought, I don't know if this is just going to be a 1 to 2 day pullback, and I'll explain why. You see from the low of the Dow right there, let me finish my thought here. So the CD is half price. My opening call, $128, I'm throwing in free. So you basically, I'm giving you $4 to just try it out. It's all for free. Once you've got the half price of the CD, my webinar, my opening call, daily newsletter, very detailed newsletter, it's just yours. And if you want to continue subscribing, that's fine. If you don't, you just say, hey, that's it. So here we go. The Dow went from the low of 12,471 on the 16th of November and went to where? What's the concept of the ChapmanWave methodology? The concept is to be able to identify a low bar, to make that low bar, turn it from a buy signal to a buy mode. And I explain in the CD exactly. I go over and over and over what you want to do with the MACD and the stochastic, how you can also add to the trade. So once you get in at a decent price, you can add to a trade. That other trade will be what I call a second trading position, and that once it gives you a profit of I'd say profit of maybe 1% or so, then you can put a stop right there so that you don't get taken out on that second position. Second position should lose you just a tiny little bit, but it should make you money. That's the whole object of the second position. Why? Because you can keep your route for a long time and hold on. Now look at this. The Dow goes to peak A at 13,011 on the 23rd, pulls back, goes to peak B, 1 penny above peak A, starts leg B, goes to peak B at 13,062 on the 29th of November, pulls back. But look what it's holding, the 9-period moving average, that purple line right there. I'm going to make it a little bit bigger because I can see this, a little tiny. You've got a number of things going on. I almost took away the rising wedge, but in fact, the rising wedge, I kept here on this particular chart. I took it away in the daily chart that I show subscribers, and this is every single day. Because there's a cup formation. And right now, the cup formation is way important, more important than the rising wedge, because the rising wedge, it went slightly above it. Therefore, it's still active, but basically, it said there's more strength than you would have thought. And I'm thinking here, the Dow pulls back. I don't know if it was even worth going short. Why? Because I think it's going to be a shallow pullback. It's just a news-related thing, maybe a Boehner, Obama, Boehner, Obama, Boehner, Obama type thing. And basically, what we're looking at is that the technicals are still so strong that you've got peak A, peak B, peak C at 13,087, peak D at 13,089, and then a very extensive move up in exactly the left side, right side price movement from the candle, the barrier candle on the left side that Grand Canyon downslope on the 23rd of October, that making 13,290 the left side high that needed to be taken out. It was taken out exactly on the day of the 11th of December, and this is what the book teaches you right here. Let me see if I can just find. Oh, I didn't put it in. I'll show it in a little while. I'll show the book, the CD introducing the ChapmanWave methodology book, how I explain that very thing, and it gives you a price movement. Oh, I took it out. I'm sorry, that shouldn't be taken out. There should have been a price movement that took you right to from there. Where did I have it? Oh, from there to there. So it takes you right to the 11th. That was 2 days ago. The candle goes slightly higher to 13,329, and then it pulls back. So the 9-period moving average, this red line right here, is 13,139. That should be very strong support, number one. Number two is, if you're using the technicals, the MACD is still at 89%. I keep saying that. The MACD is still very strong, and the stochastic is at 89%, and the on-balance volume has made a peak D. The price has made a peak E with a doji candle. So it says that the rising wedge tradition is to pull back. Some people say it pulls back all the way to the bottom. I say, it only pulls back maybe 15%, if that. Sometimes 20% on a worst case basis. My reading of this is that the strength is so strong that 13,141 area should be very strong support, but actually it doesn't even have to go much into the candle of the 10th of December, that very small doji candle, 13,195 high, 13,139 low. That's the candle that I suspect that we could pull back to if we do. Now there's another technique that I spoke of yesterday and the day before. It's called the ChapmanWave stalked leg formation. I'm going to just touch on that, and then I'm going to do this as we sign out right now, and then I'll come back and give you all the numbers at 877-927-6648, and then we'll go to John in Knoxville, and let me show you this right away, and that is the MUB, iShares, National Municipal Bonds.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Just let me run the numbers quickly and we'll go to our first caller. I just want to, I'd mentioned MUB just before we went to the break. MUB, folks, this is what you got to watch. MUB is at an unbelievable move to the upside. It is the iShares S&P National Municipal Bond. Now, I believe strongly that just as the dollar, I was on once and I suddenly mentioned this and I said, I can't remember the name of this thing. It's like this little gopher or something keeps popping its head up and bang, 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 they keep knocking it down. And then as I was talking to my first caller, he said, oh, what a coincidence. My uncle owned that business called Whack-A-Mole. I said, that's exactly what I'm thinking. Yeah, Whack-A-Mole. That's certain things in the market. Every time it wants to rally, it gets gets knocked down. Well, it's the exact opposite. I don't know what you would call Whack-A-Mole. It's the return of the the turn of the whatever it is, the midnight something or other that keeps coming up, rising. Well, this is what the MUB was. It just kept on going higher and higher, and it hit a high back in February of 2012 at 113.99. It pulled back to 107s back in March of 2012, and then it went to 114.52, just slightly higher. Peak F announced pulling back in what I suspect will be a rectangle pattern. Normally, I would have got a pretty decent sell signal from this, but more importantly, what I'm looking at is that because the Fed, like the dollar, kept on trying to rally and it got knocked down. So it's the exact opposite. We've got a balloon that is failing. It's losing its helium. But in fact, the Fed, which is the hot air in more ways than one, is pushing and pushing and pushing the balloon back up. So that's going to contain the price. I would have said, wow, I think we might go in for a hat-trick top in bonds and the munis in particular. MUB is the symbol trading at 112.53 down 14 cents. Had a horrible candle, a ChapmanWave Roman candle yesterday, and I suspect it's going to test and then break 112.23 and then bounce, and that also fills in a gap, a previous back from November. Let's go to our first call. We've got John in Knoxville, Tennessee. Hi, John. How are you?
Very well, Basil. Yourself?
I'm very well, thank you.
All right. The reason why I'm calling you is because I have two positions in Facebook.
Two long positions?
Well, I have the stock long position.
Right.
I also have a call position. I have the February 22 calls.
February 22, that's fabulous.
January.
Oh, even January, that's fabulous. Oh, and I'll tell you why it's fabulous. When a stock comes out as an IPO and then just does everything wrong, it doesn't happen often. Well, it actually happens a lot more than one imagines, but it's not the stocks that are really the popular stocks that everybody's looking at. So Facebook made a round number high of 45 the day of its IPO, and a lot of institutions were stuck buying it. Well, it hit 45, and then it tumbled down. It went below the 38 round number low, and it started to... every time it tried to rally, it just could not do anything with that rally. And eventually, it started to make a base around about the 17s, between 18 and 17, kept coming down. Finally, the U-shape formation turned into a double U-shape formation, double cup formation, and it's broken out. And I've got it now either in E going to an F, but I suspect either way I count it, A, B, C. Either way I count it, I'm going to call this... the high, the round number open of 28 on the 3rd of December is really important, because if Facebook is able to close, it's done it once. No, it hasn't done it yet. I thought it had. 27.98. If Facebook is able to close above the 28 round number high 2 out of 3 sessions, and 28.88 was the actual high in this comeback, I suspect that it's going to try. You see, what's happened is it's filled the gap, and there's a lot of resistance in this whole area between 29.49, 29.50, that whole area from July. So my suspicion is that it's going to have a little bit further to go. Then it's going to pull back in probably some kind of a rectangle formation, and then it's going to move higher. One of the reasons I say that is that a stock that was absolutely out of favor, I mean, it could do nothing right. There were lawsuits. Everything about it was wrong. From the moment that it opened until the day that, what's his name, came out, whatever his name is, from Facebook, Zuckerberg, until he came out and suddenly he made the point of saying, not that he's going to focus on the stock, but he's going to focus kind of, he hinted that he wanted to look at the equity side of Facebook, rather the price of the stock more than he had before. And that turned it around. I love your position. Gives me a time. We'll take a break, and then I'm going to discuss what I actually see for Facebook looking out. So hold on. I think you're in a great position. I'll be right back with John, Mark, and Joe.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. The Dow is down 26 at 13,219. Always good to look at the TV to see who's talking at any particular time. There it is. Bailey was on, so the market pulled back. But, once he leaves, maybe it'll come rallying again. The Dow is down 24 at 13,220. The S&P is down 3 at 1425. Comp Index is down 6 at 3,007. Gold got smacked. It's down 17. It was actually down 23 last night. Dow, it's at 16.99. Still do not like gold, the gold contract. Silver is down 1.2. That's very big. 32.5. Copper is now down 4 at 367. So this is copper's finally being hit at its peak. Remember the ChapmanWave methodology I was talking about? So if you look at the copper contract, where is it? It went to a peak E, maybe a fractional new high, 3.7190 and 3.72. So it went to a peak F, in the ChapmanWave that says, whoa, be a little careful there. And then you say, okay, yeah, that's the price. But wait a minute. What about the right there? What about the MACD and stochastic? Well, the on balance volume is turning down, a little W formation, but the MACD is very strong and the stochastic's at 89%. So I see a pullback maybe to 3.6. It's at 3.66 right now. And you've got bonds are down 8.30 seconds at 147.26. To have bonds and the market go down simultaneously, yes, it does happen, but it doesn't happen for very long. It doesn't happen very often. So we're going right back to John in Knoxville, looking at FB, and Facebook is what we're looking at. But I'm going to make a suggestion here, and it's a suggestion that you say you have one call or you have a couple.
I have 5.
Oh, you have 5. Then I'm going to make a recommendation. And that recommendation is you don't have to do it right now. But I'm looking at the 120-minute chart, and it says there's a rectangle formation that is forming right now with very strong resistance at 28.88. I suspect that on one of your positions, you should consider you've had a really nice gain, correct?
Yes, sir.
You probably have had about a 40 to a 60% gain on your call alone. So I'm going to recommend reward yourself by at least taking one of them off. If you take one off, it doesn't make it a break-even trade just because you've still paid for the others, but it gives you that cushion to say, that was my goal, was to take one off, at least one off, when it reached a particular peak where there's a lot of resistance, and it can start to pull back because you know how quickly the premium shrinks. That's number one. Number two is, I'm not going to tell you to take all 5 off, but just one right now. I want to congratulate you on a fabulous trade. I'm looking at this and I'm saying, if this is peak C in the weekly chart and there's a cup formation, there's a chance, and a lot depends on how it closes on Friday. But if Facebook doesn't crack 2460 in the next 3 to 4 sessions, but instead is able to get to 29.15, somewhere around there, I suspect that will be, if it does it this week, it's going to be leg C up. If it does it next week, it's leg D. And I suspect that the left side targets of 29 to 31 or even 32, that's in the cards for Facebook over the coming, I'd say, 2 to 3 weeks. So I think you're in a fabulous trade. Now, all I will say to you is if it starts to slide under 27.50, maybe take another one of those calls off. Reward yourself again by saying, whoops, now we're going to have to see our 2691 to 2668 holes. If it breaks that, then there's a chance it will come back and test 2567. I think it's the stock du jour. It's what my fund managers who missed out completely are saying, I want this to go up. I want to get out of my trade at the much higher prices. The targets are higher prices. I think you got a great trade, so congratulations.
Thank you, Basil.
And thank you so much for calling. I appreciate that.
Yes. I also got like a WFM put. It's going expires next Friday.
Oh,
if you got a chance to.
You're right. Well, I've got callers on the line. You know what? I'm going to leave. I'd like to talk about this because I consider that it is a short position. I've missed out shorting on it. I was waiting for a little bit higher. I'll talk about that if I got a chance, but all I'm going to say to you is, on a stop, consider that if it pops over 92.71, you want to just get out of your put position. Right now, I think you're in absolutely the right position. Thanks for calling. I appreciate that.
Thank you very much.
Thank you. Let's go to Mark in Denver. Hi, Mark. How are you doing?
Good. How are you?
I'm very well. Thank you.
Good. Hey, question. I've been kind of waiting with bated breath to get into some of the gold miners by way of the GDX and or the triple, which is the Nugget, NUGT.
Right.
But I'm looking. It still seems to me like it potentially could be making a lower low and testing out some other areas, and I'm wondering what your thoughts are.
Well, my thoughts are I'm still negative on the gold contract. There are times where the gold contract can do one thing and that the GDX or the GLD, not the GLD, the GDX and the GDXJ, is it? I can't remember just offhand. That's the junior. Actually act independently because that just happens. One is gold price and one is actual production and sales, etc. But I'm looking at this as a potential for a dreaded H going to an M pattern, which is already done, the GDH. I'm showing the chart here.
GDX, yeah. Okay.
The GDX, and the GDX itself says to me the big test is going to be, because it's now decisively under the 200-period exponential moving average, the big test is going to be is how does it handle 45.22? My eye says that it should get to the 42.20 to just under the candle, the doji, this long-legged doji of the 1st of August at 41.09. That's the area that I'd be looking to. And if it holds there, it's just above the major support. If it's very successful, it can have a pretty darn good bounce, and that's at 40.40 is the most important. If at any point this thing takes out 40.40 in the next month, that's going to be very bad. But I think it's just a stair step, lower highs, lower lows, arch formations all over the show. That's what I'm looking at in the daily, the weekly, and the monthly. So here's what I would say to you. Have a little patience, and then we will check. Give me a call, say maybe on Monday. Let's look at it again, Monday or Tuesday. That's when I think stocks like GOLD, you see, it's the same thing. GLD is making the pattern that I call the dreaded H, and if it takes out 100.06, then Randgold Resources, the next support is down at the 97 area, 97 to 96. So I suspect that there's a bear market unfolding in gold, and I think it's going to be long-lasting, but you'll be able to play a 3 to 5 week tradable rally, I'm sure, but I'm not going to do it just yet. I want to see how ASA is one of the stocks that I follow quite closely. That made a perfect peak D-top at the high of on the 21st of September of this year at 25.92. It's already plummeted down to 20.71 with a round number 21 close. It's at 21.19. If it closes decisively under 21, that 20.75 is vulnerable, and then the next step there would be down at 20.60. So we're all within about a point or so of finding some kind of a base of support. Hold off a little bit. Let's see. And I would only treat it as a, I think you know, as a counter trend trade. But it could be a very nice one. So, and even if it was an M formation in a stock like, even if it was GDX, let's go there, and it's counter trend arch formation, that can take you all the way from the 45, 44 area back up to retest the 47. So that's the 3 point. That's a very nice tradable percentage gain. So I'm holding off, and the weekly chart still remains in a decisive down channel, and the monthly says, be careful, the dreaded H, that can retest the 200-period moving average of 43.75. Have a little patience. I don't think this is the time, but I think it's getting close to at least a tradable bounce. But be careful, because this is also the phase where if the supports don't hold, the GLD is like an empty hole. If GLD starts to fail and closes underneath 162.30, that's only 2 points away. It's like an empty hole to the candle of 154 of August of this year. So be a little careful. Thanks so much for calling. I appreciate that, Mark. Thank you. Well, let's go to Joe in Fort Collins. Hi, Joe. How are you doing?
Good morning. How are you, Basil?
I'm good. And we're going to talk IYT, right?
Yes, sir.
Now, the IYT is the U.S. transportation iShares, made a new recovery high this morning. You know, this, folks, is the reason why I'm not prepared to go all out short, or even to buy an index short right at this particular time. Individual stocks, absolutely. There are some stocks that just cannot get out of their own way. They just, every time the market rallies, they fail to rally, and every time they have a rally, it's only a couple of points, and they give it back in the same session. So what I'm looking at here is IYT is the exact opposite. It's got I would call this an engulfing candle. Now, let me explain what I'm talking about. Every once in a while, you get a trading range, and the trading range continues for quite a while, and the IYT is trading at 92.69, up 42 cents, when the overall market is down. Dow's down 31, S&P's down 4. It's showing internal strength, because you would not get the rails or the airlines and these guys moving up if there wasn't some kind of strength there. Now, and it might be that crude oil is pulling back, doesn't matter what it is. If you consider that the low bar of 85.63 made on the 16th of November, that was the market low, and today's high of 93.32, that has taken out the entire buy signal to buy mode from September the 28th at 86.63. Anyone looking at my the Tiger TV right now, you'll see it went to 92.38 with a round number 91 and that turned around from peak D in the ChapmanWave. That's what you want to go. Buy signal to buy mode takes you to at least D. It hits the trend line resistance and pulls back. Well, we are way above 92.38. We've been above 92.38 with today's high of 93.32. You've closed above it for 4 sessions. More importantly, the low bar of 85.83 is lower than the low bar of 86.63 of the 28th of September. So I'm calling this an engulfing, and I'm giving preference now to a leg B with a very good chance that the transportation index, as long as the stochastic's holding above 80%, and it's at 87 right now, and the MACD is expanding, is producing a candle here that says, that's okay. I can pull back maybe to 91.75 or even the breakout line, trend line of support of 91.54, but I'm liable to come back and go above, if today's high was the high for the next couple of days, above 93.32 for leg C and then leg D. That's the way I'm looking at it, because the last move was a full move, A, B, C, D. I'm saying that's the characteristic. We should get that now. I like the trade. Now, I said to you yesterday, you had the call options, that maybe to take something, I don't know if you took anything off yesterday?
Not yesterday, I didn't, because of what occurred after we spoke.
Oh, because it rallied after. There was immediately, then there was the Fed, and the Fed spurred a very nice rally, right?
I think it was the Fed, sure. But what I was looking at was the on the level 2, if you look at the inside contracts as far as buyers to sellers, it remained a 6-to-1, 8-to-1, 10-to-1 ratio on the buy side, although they knocked the bid price down to 50 cents.
Right.
Which is a heads up, literally, because there's still support in there. So I knew it was a fake rally. I follow Elliott Wave. I've been doing that for over 30 years, and
right.
I like to incorporate your work also because it helps me. It complements Elliott. In other words, if I look at a specific count in Elliott and say, oh, it should be this, this, or this, I like to understand what yours is comparatively.
I'm going to interrupt you there for a second. That's precisely what a couple of people, one person in particular, who I think is one of the best Elliott Wave people that nobody ever knows of, that I'm in contact with. That's exactly what he said. He's taken my course, and he said that what he loves about my work is that it clarifies Elliott Wave for him. The parts that people would think are fuzzy become clearer. So thank you. Keep going.
So what happened yesterday was it turned into an irregular movement, according to Elliott, and I decided to hold a position. And
so that on 120, that would have been like a flat, but going sideways.
Exactly. But
right.
irregular, what's called an irregular flat, because it went slightly higher, which
slightly
means
higher, correct.
Slightly lower, which
right.
is this morning.
This morning.
It closed yesterday. At that point, I took my grandson out to the park, and we had the day off yesterday, waiting for this morning. So this morning I went in and expecting an impulse wave going up, which we got. So I closed out another 15 contracts at 80 cents.
Oh, that's fantastic. Oh, bravo. Yes.
So we're still holding on to 45 contracts and hanging in there and looking for the next move to come.
Okay. So the next move to come should be a pullback. And the pullback, based on the 120-minute chart, says that, let me just do this quickly, A, B, C, D, E, F. Why am I on the white chart? I should be on the black chart. I should be on the white chart. This is the I, white C right here. Yes. Now, what happened is we made a peak E yesterday, and we went, that was at 93.18. We went to 93.22. That's F. And this is a G. I'm going to call it a G just to be a little conservative right now rather than a brand new C. So I'm going F, G, change the color so that you can see it. And what I'm anticipating here is, because you look at this upside down, you say, hey, wait a minute, that looks like, first of all, it's got the ChapmanWave cup and ladle breakout, and that usually goes to D, but it can go to an E and an F. That's number one, so it's gone a little higher. But the stochastic has pulled back to 64, and the MACD is dipping just a little bit. Do you have time to hold on?
Yes, sir.
Okay, folks, we're looking at the IYT with Joe from Fort Collins, Colorado, and he's had a fabulous trade with the IYT using options. He's using Elliott Wave and ChapmanWave, and we're going to talk about it as soon as we get back, based on the 120-minute chart and the daily.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour. We're looking at the IYT daily chart. That's the iShares Dow Transportation Average. Now, the monthly isn't finished yet, but so far it's broken out of what we would call a symmetric triangle. That is a triangle on the side with almost the same degree of decline as degree of rally. That's number one. Number two is the ChapmanWave, in my CD introducing the ChapmanWave methodology. Oh, I forgot to put the book on. Then the CD introducing the ChapmanWave methodology is a CD book that goes for 470 slides. It has different chapters, and one of the chapters is called the falling axis, the declining cone formation. When that descending trend line is broken and held, 2 out of 3 bars. In this case, it's a weekly chart. So going into the first week of January, if the IYT is still holding above 90.52, but preferably above 91.67. It's at 92.78 right now. There's just a really good chance that it's going to tackle every single left side bar and take it out. 93.49 will be the first. That's the bar of the 14th of September, the week of the 14th of September. If it takes that out, the next one will be 94.66, and you just go on peak by peak on the left side. And eventually you want to see a big cup formation that goes all the way back to the previous high of 96.22. I'm going one step at a time. This is called a gray A. That's not a brand new buy mode in the sense that I've got a confirmation. It's just, it says there was a major peak at 96.22 the week of the 23rd of March. We are now in a retracement rally failure mode in the ChapmanWave that just describes the kind of, it's a rally that could fail at any time. The technicals so far are okay because the stochastics at 60.97 and rallying. The MACD is good. You want the MACD, the stochastic to be up in the 80% for this to really have a concerted effort. So my impression right now is that there will be a peak B. It could be a mild peak B with maybe no new high next tomorrow. You don't go above, say, 93.03, 93.10. You just don't take out today's high. If you do, that's really bullish. But if you don't, it says, okay, a pullback, and then 92.20 to 91.65-ish, 91.32. That would be what I'd expect. I actually don't expect in this pattern for it to pull back below 91.76 before trying peak C. So that's the way I'm looking at it. If you're talking Elliott wave, this is only leg 3 up in a new move. That's the way I would look at it. But not until you take out the left side high bars that there's tremendous resistance in the daily going all the way back to the 6th of July, where the high was 93.81. So I like your position. I love the fact that you took your some real nice profits. How about we look at it again maybe Monday or something, or maybe Monday or Tuesday, and see how it's holding and see if it's going to go into leg C. So thank you very much, Joe, for calling. I appreciate that. And so let's do this. Dow down 27, 27, S&P's down 3.5. And you've got to expect some kind of a retracement right now. So I'm going to go quickly. I spoke about the MUB just a moment ago, and the MUB is at, this is very important. This is the iShares S&P National Municipal Bond. So that has to be watched. I think that's made some kind of a shorter term to intermediate term top. Should be a sideways move, only because the Fed, I would have said this is going to plunge, but I'm not going to say that. I see a huge rectangle formation. They could even go down to 108, 106. But at this particular time, it's the candle, the ChapmanWave Roman candle of the 12th of December at 112.23. I suspect we just take that out and then we come back into this and we start trading between 111.80 to 112.20 to maybe 113.70 for a little while and make the H to an M pattern. That's what I'm looking at. That's very important. So, folks, hold tight. Larry Pesavento is coming up for the Commodities Hour. Don't forget my CD introducing the ChapmanWave methodology. Sale on half price. You get my opening call for a month free. Not only that, I'm like giving you $4, and you can use your Tiger dollars. What a great opportunity. And I will be back tomorrow. Thanks for being here. Stay tuned for Larry and all the great shows here at TFNN. Be back tomorrow morning.